18.
Sentiment across India's manufacturing sector remains upbeat, but exports are facing headwinds amidst a challenging global environment. These are the key findings of a survey conducted by industry body FICCI. Now, more than 400 respondents across 9 sectors were polled to study the trends in the first quarter. These include small and medium enterprises as well as large companies. They were all part of the survey, which covered companies with a combined annual turnover of nearly 8 lakh crore rupees. 57% of those polled expect a higher level of production in the April to June quarter. The average increase in production is likely to be in single digits. Now, 58% of those who polled by FICCI say that a higher number of orders have been seen in Q1. Domestic demand is largely driving growth as exports face challenges. Only 28% of those polled expect higher exports in Q1, with growth slowing across developed economies. Companies that rely heavily on exports are likely to struggle, and that seems to be the consensus that is coming through the survey. The optimism across the manufacturing sector is, however, not uniform. The electronic and white good industry is the most upbeat, expecting more than 20% growth in Q1. Automobile, capital goods and construction equipment also expect growth to be in the range of 10 to 20%. But metals, textiles, apparel, toys and handicrafts expect moderate to low single-digit growth in the first quarter. Well, those are the quick findings of the FICCI manufacturing survey on the CEO Centimeter. Joining me now to discuss the findings are Shubhrakant Panda, the president of FICCI, Anish Shah, the MD and CEO of the Mahindra Group, HP Singhania, the MD of JK Paper and former FICCI president, and also with us Manish Sharma, the chairman of Panasonic Life Solutions in India and South Asia. Gentlemen, appreciate you joining us here on CNBC TV 18 on what is a very special day for us because we're inaugurating our new studios and we're going live with this very first show here on CNBC TV 18 from our Delhi headquarters. So it's great to have you all here. Not quite manufacturing, but I guess this is our contribution to private capex in a very, very small way. But Shubhrakant Panda, let me start by asking you, the survey very clearly shows that in Q1, demand continues to be strong. But what's the forecast in terms of how confident industry is about demand holding up?
Well, Shireen, first of all, congratulations on the new studio. It looks absolutely brilliant. Now to get down to talking about the manufacturing survey. As you know, this is something that we do every quarter, and the trend generally has been positive. If I recall correctly, going back 2 quarters, the average capacity utilization was 70%, which was then went up to about 75% in the last survey. And the current survey that we are talking about today, the capacity utilization on average is around that same 75% mark. But what is interesting to see is that some of the laggard sectors, which in the previous surveys were at 50 or 60%, I think most of the sectors that we polled are now in the mid to high 60s and up. So that is a good sign. And as you pointed out, some of the statistics, I think generally there is a lot of confidence arising out of domestic demand where we stand today. And I think that is evident in these responses of higher output, higher expectations of growth, more respondents, more than half of the respondents looking at investing and adding capacity. So all of these are good numbers. I think a couple of other data points, if we were to look at, about 38% of respondents are looking to intend to hire. So all of these are, I think, very good data points. And I generally believe that going ahead, this sentiment will continue in a positive manner, because what the government has also been able to do, besides a supportive environment on account of ease of doing business measures, but also the significant outlay in terms of public capital expenditure, which is beginning to crowd in private investment. I think that is a sentiment which will continue. Having said that, there are some challenges on account of headwinds due to the global scenario, whether in terms of inflation continuing to be a bit of a challenge, although fortunately, I think we are beginning to see even that get addressed to a large extent. The US numbers seem to indicate that. Of course, there is a little bit of cooling off as far as exports are concerned. But in as much as the year in general is concerned and looking at the next few quarters, I would expect a positive sentiment to continue, driven primarily by the domestic situation. but also with the global situation sort of starting to also turn around and exude more positivity.
Well, yes, so you're right in pointing out that at least as far as the survey is concerned, the data points are suggesting that the trajectory is going to be strong. Anish, let me come to you. You know, we chatted a few days ago and you were very confident about domestic demand. And of course, that is reflected in your numbers as well. Auto and auto components, even as far as the survey is concerned, the growth expectation is in the strong category. What does that mean in terms of enhancing capacity at this point in time, not just for you, but across the industry? What's the sense that you get? Because production utilization continues to be in the 70 to 75%.
First, congratulations again on the new studio. And it's great timing as we see a lot of optimism across industry. With regard to the survey, this is something we had frankly expected because we've been seeing this optimism despite some of the challenges that we've seen around the world. Shubhra talked about a 75% capacity utilization, but there are sectors where it's even higher. Cement is 85%, automotive it's 80%. As we look at electronic and white goods, it's 77%. So we are seeing multiple industries where we are reaching a level where more investment will go in. We've also polled our members to look at private investment, and in many areas like hotels, logistics, consumer durables, we are seeing a significant uptick in private investment, north of 50% versus what it was earlier. And from our standpoint, as we spoke last week, Shirin, we are looking at doubling capacity in the auto business. And our sense across the industry, not just for automotive, but also for a few other industries, is that there is more capacity that will come in. Some of that may not be in plans as yet. So we should see, hopefully, more optimism as we go forward.
Okay, more optimism, doubling of capacity, specifically as far as the Mahindra Group is concerned. But as you point out, that in some sectors, across some industries, you are seeing capacity utilization now nearing 80 to 85%. And one expects that that will lead to additional capacity. But Mr. Singhania, many thanks for joining us as well. Just to pick up on that thread in terms of private investment picking up. And, you know, as we are seeing across different sectors, there are incipient signs of it picking up. I want to ask you specifically about your plans and more so what you believe are the growth drivers propelling the manufacturing story today.
Shireen, let me add my compliments on this wonderful spanking office, and it seems that you've also dressed up for the occasion. So that looks wonderful there. So I think picking up on the thread that my friends have talked about, I think one thing is very clear. There seems to be a robust domestic demand, which is coming through across sectors. But as has already been pointed out, it is variable on different sectors. So let's take our businesses. We are seeing strong demand growth in sectors like cement and even tires, and in some parts of paper. But on packaging board, for example, it is much more tepid. The other part of the equation is in terms of pricing. Now, what is happening is that as global commodity prices or as input prices have cooled off, there has been an effect on the domestic prices as well. And therefore, there is a fair amount of volatility that is happening. The third point I'd like to put here is that because everybody has talked about, and you started off also by saying that exports is an area of concern, because the global economy is in a state of a slowdown, and India is a bright spot as an exception. So when that happens, and Indian companies are not able to export as much or face greater headwinds in exports, it means they have to find a domestic market for that. So that also changes the equation. So I think there are these things. So overall, domestic demand being strong, but margins in some sectors being under some degree of pressure. But we hope that with improving commodity prices, some of that will get corrected.
You know, and that's an interesting aspect that you've brought to the table as well. I just wanted to pick up specifically on cement because one of the sectors where demand is actually supposed to be moderately strong as per the survey is the cement sector. And one would imagine, or one would expect, that given the infrastructure build out that everyone's talking about and everyone's betting on, that cement would have been in the very strong category, but it's in the moderately strong category. Why do you believe that's the case?
First of all, Shireen, let's look at the figures from the point of view that cement is a very regional industry. So a survey like this, which is broad-based, may not be able to bring out each aspect of it. But I think that the point is cement demand has been good. I think there's no doubt about that. The issue has been that in the last couple of years, the pricing has been difficult because there have been cement relies on fuel like coal and pet coke and even furnace oil in places. So therefore, those prices have risen a lot. And the industry has not been able to pass on those prices. So demand is good, but margins remain under pressure, as you've seen in the last quarter of a lot of companies. But infra and housing both seem to be doing well. And in infra, particularly thanks to the government push and front-loading that, we think that this will continue to have a good run going forward.
Right, margins under pressure, but you believe demand will continue to be strong. Manish, thanks very much for joining us. The outlook as far as you're concerned, and specifically on the back of policy measures that the government has undertaken, especially with the PLI schemes, etc., to nurture and foster some of these sunrise sectors, what could we expect happen on that front, not just in the near term, but even in a slightly longer term? What's the outlook?
Mid to long term looks very promising, and I'll tell you why. Let me take a step back. Say if we try to stitch the story of what has happened in last 10 years, while it might be not written the way I'm narrating it, but let me take a step back. So initially came schemes like PMP, Phased Manufacturing Programs, between 2014, say till 2017. And these were the schemes which are essentially creating an inverted duty structure to let the assembly of goods which are consumed in the country to happen in the country. And subsequent to that came in schemes which were capex incentives in nature, like MSIPs and the MSIPs 2. And finally came PLI. It appears that this methodical approach has created the situation which has culminated into the current environment of letting majority of products being assembled in the country of what are consumed in the country. And let me try to give you some figures. Say consumer appliances, the durables, which is roughly about 90,000 crores industry, 25% of this comes out of air conditioners. And out of the effort of last couple of years, subsequent to which came the PLI for air conditioners industry, we initially kept a target that within the first year of the announcement of PLI for air conditioner, which currently happens to be a 25,000 crore industry for air conditioners, wherein the current penetration ratio for ACs in the country is just about 6% of households. We set a target that in next 5 years, let us take this industry from 25,000 crores to 1 lakh crore. And we expected within PLI in the first year, the investment will happen to the extent of 1,000 crores to enable backward integration, which means letting the components get manufactured within the country. Let me tell you, only in about a year since PLI came into existence for air conditioners, the investment has exceeded 2,000 crores, which is double of the initial estimates done by the industry. And the production has exceeded 3,500 crores. So that is the speed at which, fundamentally, because of a very large opportunity, essentially getting fueled from aspirations of the people of the country and also lower penetration ratios of such categories. So mid to long term, I believe the potential of electronics and white goods industry is very promising.